Hey my dear students, I hope you guys are all preparing for your exam in a great manner. Here is one more extra resource for you all to help you for your preparation. So as I always insist, before you go for the examination, two most important resources which you must refer. One is RTP, which has been released for the respective attempt, and the other sources are MTPs, the two series of MTPs which will be released for the exam. Those are most important resources before you go for the examination, which each and every student must refer. So in this video, I will do a quick explanation of RTP. This video, I'm going to talk about the RTP which has been released for CA Inter Audit for the September 2025 attempt. Yes, here there are a few conceptual questions are there which will be very important from the examination perspective. Tricky questions are very less, but the conceptual here and there a few things are there which are a bit conceptual, important from the examination perspective. And also, if we do RTP and MTP, it will act as a quick revision of the important concepts from the entire subject. So that's why I always insist you to go through RTP and MTP. So in this video, I'll be quickly covering the RTP. Okay, right. So without any delay further, let me start with a case scenario based MCQ. Here they have given one interesting case scenario based MCQ. Let me try to explain it before you. So let us have a look at the facts. Mohan and Associates were offered the statutory audit of SEMI Private Limited for the financial year 2024-25. In line with the professional requirements, the firm communicated with the outgoing auditor, Veer & Co. So these are getting appointed as a first. This is a initial audit engagement for this new auditors, Mohan and Associates. So the previous auditors were Veer & Co, with whom you are required to communicate. It is one of the preliminary engagement activity. So the new auditors try to communicate with the previous auditor to inquire whether there were any professional or other reasons that would preclude them from accepting the appointment. However, no response was received from the previous auditor. See, the previous auditor did not respond back to the current auditor. See, it is one of his ethical responsibility. This is one of the professional behavior. If a fellow chartered accountant is asking you whether why you have resigned, are there any objections, is there any issue with the company, whether he can proceed accepting the audit or not. When another chartered accountant is asking to you, it is your minimum professional behavior to give a response to him. But here the previous auditor did not respond to the current auditor. So now out of this, they have one question. The previous auditor, Veer & Co, did not reply to the communication of Mohan and Associates, which a fundamental principle of professional ethics is not followed by them. So tell me, which fundamental principle has been violated? Professional behavior has been violated here. So as you all are aware, 5 ethical requirements we have: integrity, objectivity, confidentiality, professional competence and due care, and the other one is professional behavior. In the given case, what is violated? Professional behavior is violated. Now coming to the next paragraph. During the audit, Mr. A partner of Mohan and Associates, relied solely on management representation letter. That means the auditor wants to completely rely on written representation. We have SEP'25 which says that written representation do not provide evidence on their own. That means you can't rely completely only on written representation. But here auditor is doing a grave mistake. He wants to rely only on management representation letter to support the accounting treatment of certain tax matters that were under appeal, and no additional audit procedures were performed to verify the appropriateness of management's treatment of these matters in the financial statements, which may raise concerns regarding the sufficiency and appropriateness of audit evidence. Right. So out of this, there is a question here. The auditor did not carry out any other audit procedure to justify the management's treatment of the said tax matters which are under appeal in the financial statements. That means apart from obtaining written representation, he did not perform any additional audit procedure regarding the tax matters. What is lacking on the part of the auditor in such a situation? So which quality is lacking on him? See, one of the most important quality and characteristic which every auditor must possess is a professional skepticism, having a questioning mind. You can't blindly accept whatever management says. So here in the given case, if the auditor has blindly relied only on written representation, so which quality he is missing? Professional skepticism he is missing. So what is missing here? Professional skepticism is lacking here. Next, as SEMI Private Limited has recently appointed a new accountant who lacked adequate knowledge of the accounting standards applicable to the company, the management requested Mr. A to assist with accounting and bookkeeping services. See, the company has appointed one new accountant, but that accountant, whomever they have appointed, he doesn't have enough of knowledge of the standards or accounting related matters. So that's why what they're asking is, they're asking the auditor, they're asking the engagement partner to assist them in accounting and bookkeeping services. You tell me, can he do it? No. If he helps the management in accounting and bookkeeping services, which threat is getting ignited here? Self-review threat. Why? Because if you assist them with the accounting and bookkeeping services, the same work which you have to review as an auditor, so you will be reviewing your own work. That is an example of the self-review threat here. So Mr. A declined the request, recognizing that providing such services could impair his independence as an auditor. So now if you look at the question, Mr. A was requested to provide accounting and bookkeeping services to CMA Private Limited. Identify the type of threat to independence that may be involved in acceptance of such an engagement. So what kind of threat will be there here? Self-review threat will be there here. Next, coming to the next paragraph. Meanwhile, Mr. Raj, an investor in CMA Private Limited, placed full reliance on the audited financial statements, believing they indicated a strong financial position. He assumed that audit guaranteed the safety of his investment without any risk of loss. Do you agree with that? Does the audit provide guarantee? Does the audit provide absolute assurance? Definitely not, because audit provides only reasonable assurance. So that's what even they try to put it here. Mr. Raj is confident that investment made by him is completely secure and there is no risk of any loss. Select the correct statement in this regards. Option A, audited financial statements provide absolute assurance. No. Option B, audited financial statements provide reasonable assurance. It doesn't guarantee complete accuracy. Yes, this statement looks very much correct. Next. While finalizing the audit documentation, Mr. A prepared the working papers in physical form under the belief that paper documentation was mandatory. Auditor is feeling that you have to compulsorily maintain the audit documentation in physical form, in paper form. Do you think it is? No. SEP'25 says that audit documentation could be either maintained in paper form or electronic form. So if you look at the options, Mr. A was preparing the documents and audit file in physical paper form, believing that it is compulsory to do so. Is Mr. A's understanding correct? No. Identify the correct statement regarding the form of an audit file. Option A, audit file should be kept in both physical and electronic. No, both is not required. Audit file should be kept only in physical form. No. Audit file may be kept in physical form or electronic form. Yes, that option has been given by SA'230. So the correct option is C. Whereas if you read option D, they say that audit file should be kept only in electronic form. That is also not mentioned in SA'230. An option has actually been provided to the auditor. Now we have some general MCQs. While auditing Happy Private Limited, CAM reviews a large number of invoices collected by the audit team. However, noticing that only a few third-party confirmations, CAM reminds the team that simply having more documents doesn't ensure strong audit evidence and explained that reliability or quality also matters. CAM is trying to explain what in the given situation. So if you read the options, sufficiency relates to quality, appropriate relates to quantity. No, right? Whereas the opposite is correct. Internal documents are always sufficient. No, only when internal controls are strong, then internal documents are reliable. More documents mean better evidence? Definitely not. Sufficiency refers to quantity, appropriateness refers to quality. Yes, this is the correct statement. This is what he is trying to explain. Next. As per SA'560, when after the date of the auditor's report but before the date the financial statements are issued, a fact become known to the auditor, had it been known at the date of auditor's report, may have caused the auditor to amend the auditor's report. So then what auditor should do? As we have all seen, if you came to know about in a subsequent event, first you have to discuss with the management and determine whether financial statements need amendment or not. That is the first step you have to do. So if you look at the option, modify the opinion. No, that is not a direct option. First you have to discuss, determine whether financial statements need amendment. If they need amendment, determine whether management is ready to amend. If they amend it, well and good. If they don't amend it, then we will modify. So modifying is not a straight away option. Option B, discuss the matter with the management and determine whether financial statements need amendment. Yes, this is the next immediate step which you have to take. Notify shareholders directly to prevent reliance. No, this is also an extreme step. This depends on further outcome. Withdraw from the engagement and disclaim from opinion. No, you are not required to take any such extreme steps. First step what you should do is the moment you came to know about in a subsequent event, discuss with the management, determine whether that requires any amendment of the financial statements. Next, Supriya has taken a loan from bank by pledging her National Savings Certificate, which is eligible for surrender. The loan account currently shows no signs of repayment delay and the bank confirms that an adequate margin is also available in the accounts. However, the loan has technically become overdue. How should the bank classify? So if you remember the discussion from audit of banks, so we have seen that in case of loans against fixed deposits, term deposits and also National Savings Certificate, you need not classify them as NPA even though if they remain overdue for more than 90 days, provided adequate margin is available. So technically it has become overdue, but still they are saying that adequate margin is available. So you tell me, should it be classified as NPA? No, till the time adequate margin is available, you need not classify it as NPA. So the account must be classified as NPA? No. The account should not be classified as an NPA since adequate margin is available in the accounts. The account must be written off immediately? No. The account classification depends on borrower's payment history? No. Why? Because it is a special NPA norm. Loans taken against fixed deposit, term deposit, and national savings certificates. If adequate margin is available, you need not classify it as NPA. This we have discussed in our regular sessions also in a detailed manner. Now let us come to the descriptive questions. See, in the descriptive question, there are no major things here, but one or two specific questions are there. I will explain that in a detailed manner. Remaining we will try to quickly go through. Mini and Associates Chartered Accountants were appointed as auditors of CA and Limited, a construction company. During the audit, CA Mini, a partner of the firm, noticed the following: the company has several ongoing projects, but only selected project revenues have been reported. So there are many projects, but they reported only revenue from certain projects. Several expenses vouchers are either missing or are handwritten and lack proper authorization. Even the vouchers also there is a problem. The company has changed its depreciation method from this SLM to WDV without adequate disclosure in the financial statements. So many things they have done. These matters were brought to the attention of the management. However, management argued that these issues fall outside the scope of auditor's responsibility. Whether contention of the management is correct? No, 100% wrong. So here they are referring to the scope of audit. We have one concept, scope of audit, in the nature, objective, and scope of audit. So there they have given scope of audit in a detailed manner. But here, say for example, if this question is tested for 4 marks or 5 marks, we can't write the detailed answer in a detailed manner. So here, if you look at the answer they have provided, they have given a summary. So a short presentation they have given, like audit should cover all aspects. It also should cover reliability and sufficiency of financial information. It also should include proper disclosure. So like that, a summarized things they have given. And finally, they have given the conclusion. In case of the above, the contention of the management is not correct. It is the responsibility of the auditor to ensure the proper disclosures and to obtain the evidences and check the accounting policies also. Okay, so just have a look at the answer so that you will know, in case if large questions are asked for small marks, how you are required to present it, that you will get the clarity. Next, audit strategy planning and program. See, this is how sometimes ICA will try to fool you. They try to say a lot of things here. I will say ignore all the facts. Just read the last line. You will be able to write the correct answer. Explain the benefits of adequate planning in the audit of the financial statements. See, so much of some 5-6 lines of content they have given. Ignore everything. Just read the last line. So what they say here, explain the benefits of planning the audit of the financial statements. So if you plan the audit of the financial statements, how as an auditor you will get benefited? Straightforward question from the material. So like if you see here, it will help you to devote attention to appropriate areas. It will help you to identify and resolve the potential problems. You can properly organize and manage the audit engagement team. Selection of engagement team becomes easier. It will also facilitate direction and supervision of engagement team, and also you can do proper review of their work, and finally assisting where applicable in coordination. It will help in coordination also. Straightforward question, guys. Nothing here to for me to pitch in and explain. So if we come to the next question, let me come to the next question here. Question number 11. During the audit of Apex Limited, the auditor plans to place a reliance on the internal controls related to the revenue recognition process, which appear well designed based on the preliminary assessment. However, due to materiality of revenue and inherent risk of overstatement, the auditor concludes that more persuasive audit evidence is needed to evaluate the effectiveness of these controls. Discuss the matters that the auditor may consider in determining extent of controls. Here also, even if you ignore all the content, straightforward they have asked you the question, how much extent of test of controls you are required to perform. That depends on what factors. So this also a direct question from the study material. In order to determine the extent of test of controls, these are the various factors which we are required to consider, like frequency of the performance, with what frequency the management is performing that control, length of the time during the period of the audit that the auditor is relying on the control, what is the expected rate of deviation, relevance and reliability of audit evidence to be obtained from operating effectiveness of other controls, and even extent to which audit evidence is obtained from test of other controls. So these are the 5 factors which will decide the extent of performance of test of controls. Straightforward question. So this is all a matter of remembrance here. Next, coming to the next question. Yes, so here we have Bold Limited supplies Navy uniforms across the country. The company has 5 warehouses at different locations throughout the India and 4 warehouses at the borders. The major stocks are generally supplied from the borders. Bold Limited appointed KPM & Co to conduct its audit for the financial year 24-25. Mr. P, partner of KPM & Co, attended all the physical inventory counting conducted throughout the India but could not attend the same at borders due to unavoidable reason. So unable to attend the inventory counting process. Immediately the thing should have striken your mind, SA501. This question is from SA501. Now, what is the question? You are required to advise how sufficient and appropriate audit evidence regarding existence and condition of inventory can be obtained. So if you remember in SEP 501, they will ask us to go and attend the inventory counting process. By attending the inventory counting process, we have to evaluate the management plans and we have to evaluate the verification procedures, perform test accounts, and even inspect the quality of the inventory. And also one more question they're asking, how is auditor supposed to deal when attendance at physical inventory counting is impracticable? So if the physical verification is impracticable, you try to perform alternative audit procedures. If they are also not available, modify the opinion as per SE 705. Next. CA Rimi is appointed as an auditor of ASI Private Limited. During the audit, she decided to use various audit procedures to gather sufficient and appropriate audit evidence. So here the requirement is identify and explain type of above mentioned audit procedure. So we all are aware we have 7 audit procedures on an overall basis, like we have inquiry, inspection, observation, external confirmation, recalculation, reperformance, analytical procedure. They are telling what procedure has been performed, we have to name it. While verifying the fixed asset, she examined the factory equipment and verified the presence of each item. See, this is inspection. Here many students will do the wrong answer. They will write observation. No, guys. Why? Because if you look at the inspection definition, they say inspection means a documentary examination or physical examination of asset. So here, the auditor is physically examining the asset. That also will fall under inspection. Observation means what? Looking at the process being performed by others. Whereas inspection contains 2 aspects. Number 1, either documentary examination or physical examination of an asset. That also will fall under inspection only. Observation means looking at the process being performed by others. Here many students will do the mistake. So please do remember inspection involves 2 aspects, documentary examination and even physical examination of an asset. So first one is inspection. To verify the company's accounts receivable, she directly sends the balance confirmation to some of the customers. This is external confirmation. Remy examines purchase invoices, contracts, authorization records to assess the validity of the payments, checking of the supporting documents. Once again, inspection. She independently performs a bank reconciliation, independently performs auditor's independent execution, reperformance. She also checked the accuracy of depreciation calculations, nothing but recalculation, arithmetical accuracy. Next. So audit of items of the financial statements. Here they are asking you to identify the assertions. This is also a very easy question. Employee benefit expenses recognized during the period relates to only current accounting period. So whether expense belongs to current year or not, that we call it as cutoff. Employee benefit expenses in respect of all personnel have been fully accounted for, completeness, whether every expense has been completely recorded or not. Any inventory held by the entity on behalf of another entity not been recognized, rights. Only inventory which belongs to the client against which entity is having ownership, that is only recorded in the books or not. Recorded sales represent goods which were ordered by valid customers and were dispatched and invoiced. Occurrence, whether revenue has been occurred, whatever revenue that has been recognized, whether that is from transactions which have actually taken place. Then from audit documentation, we have a few questions. CA Shilpi, the engagement partner at MN Associates, is assigned the audit of following 2 companies. Z Limited, a small family run business with straightforward operations, minimal internal controls. Okay. TED Limited, a large multinational corporation with complex operations, high transaction volumes. During the audit planning stage, CA Shilpi highlights that the form, content and extent of audit documentation can be customized for each client. This is also such a question. Even if you read the last line, you will be able to write the correct answer. Discuss those factors on which form, content and extent of audit documentation will depend. So like it depends on the items of the financial statements, it depends on the nature of the assertion, it depends on experience of the persons performing the audit. Yes or no? So direct question, what are the factors which affect the form, content and extent of audit documentation? That's it. Right. Next one. Completion and review. So let us see what is that question about. During the audit of Crystal Limited for the financial year ended 31st of March 2025, the auditor CAZ was in the process of finalizing the audit report dated 30th of May. Okay. The engagement partner emphasized that CAZ shall perform audit procedures designed to obtain sufficient and appropriate audit evidence that all events occurring between the date of the financial statements and the date of the auditor's report that require adjustment in the financial statements have been identified. What audit procedures in accordance with SA 560 should the auditor perform? So CAZ perform based on risk assessment procedures to identify events occurring between to identify subsequent events. Straight away question from SA 560. What audit procedures you will perform to identify the subsequents? In SA 560, you will have that audit procedures paragraph. That's what you are supposed to write here. That is what you are supposed to write here. So that audit procedures, whatever are there, that you are required to write. Like you have to obtain an understanding of procedures which management is performing to identify the subsequent events, inquire the management whether they have identified the subsequent events, read the minutes of the meeting, especially those which have taken place after the balance sheet date, and even read the latest entity's interim financial statements. So straightforward question here. Next, coming to the next question. Right. Audit report. Auditors do not always issue an unmodified opinion on the financial statements. In cases where there are material misstatements or limitations in obtaining sufficient and appropriate audit evidence, a modified opinion may be necessary. Discuss the types of modified opinion. Auditor can issue 3 types of modified opinion: qualified adverse disclaimer. Explain how this opinion differ based on concepts of materiality and pervasiveness. If the effect or possible effect is material and pervasive, material but not pervasive, then qualified. If it is material and pervasive, either adverse or disclaimer, depending on availability or non-availability of evidence. This we all are well aware of it. Now, different types of entities. This is also a straightforward question. So you are being appointed as auditor of Shane and Co, a partnership firm. So you came to know that auditor's appointment was informal. The firm started a new business activity which is not there in the deed. Major financial decisions were taken without proper records. Now, what is the question? As an auditor, briefly explain the matters that should be specifically considered by you while auditing the accounts of partnership firms. So straightforward question. Whenever you are conducting the audit of a partnership firm, what are the special points that you will try to keep in mind? Then we have audit of banks. This is interesting question. This is the question which I would like to explain in a detailed manner. Very important. JKL and Associates Chartered Accountants are the statutory auditors of IBS Bank Limited for the financial year 2024-25. During the audit, they observed the following items included under interest income in the financial statements of the bank. An amount of 5 lakhs relating to short-term crop loan where the installment was overdue for one crop season. See, as we all are aware, when it comes to agricultural advances, they will be divided into long duration crops and short duration crops. Long duration crops will be treated as NPA if they remain overdue for more than one crop season. Short duration crops will be treated as NPA if they remain overdue for more than 2 crop seasons. In the given case, the loan is given for short-term crop and it was overdue for only one crop season. Are you required to classify it as NPA? Not required. Why? Because short duration crop loan will be classified as NPA only when it remains overdue for more than one crop season. Here it is overdue for only one crop season. Now, this is interesting part. An amount of 7 lakhs relating to an advance guaranteed equally by the Government of India and Government of Tamil Nadu, where the installment has been overdue for more than 6 months. Government guaranteed advances. So guys, if you remember the discussion, I told that if the bank has given any loan and if it is guaranteed by central government, unless that guarantee is invoked or repudiated, that amount need not be classified as NPA. That account need not be classified as NPA. You can still keep it under standard category only. You can continue to recognize the interest also. Whereas, such a special privilege will not be available if the guarantee is given by state government. If an advance is guaranteed by central government, no need to classify that account as NPA if it remains overdue for more than 90 days. Whereas, if it is guaranteed by central government, no special privilege. If it remains overdue for more than 90 days, it will be classified as NPA. You will recognize interest income only on cash basis. But here, if you see, the bank has given loan of 7 lakh rupees, but it is guaranteed equally by central government also, state government also. Central government also, state government also. So central government guarantee 7 lakhs is interest actually. 7 lakhs is interest. They are talking about the interest amounts. So 7 lakhs is the amount of interest. So for this entire loan, 50% is guaranteed by central government, 50% is guaranteed by state government. And this amount remains overdue for more than 6 months. See, whatever portion which is guaranteed by central government, even if it remains overdue for more than 90 days, still you need not classify it as NPA. You can recognize the interest income. So that means on this 7 lakh rupees, 3.5 lakh rupees I can continue to recognize as interest income even though if it remained overdue for more than 90 days. But that special privilege will not become available for the other half. For the other 3.5 lakh rupees, you have to treat it as NPA and you have to recognize that income only on cash basis, not on accrual basis. So 50-50 you have to do. So that's what even you will be able to find it in the answer. So this is what an interesting question. This is what I was saying. Yeah. See here. If you look at the answer here, in the given case, since the guarantee is shared equally between the central government and state government, and installment is overdue for more than 6 months, the portion of loan guaranteed by central government, 50%, is not to be classified as NPA unless the guarantee is invoked or repudiated. The remaining 50% guaranteed by the state government must be classified as NPA as the installment is overdue for more than 90 days. Thus, amount to be classified as NPA will be 3.5 lakhs, that is 50% of 7 lakhs, and the amount of interest income to be recognized will be 5 lakhs. What is this 5 lakhs? Okay, so this 5 lakhs they are talking about this 5 lakhs I think they are talking about this year. So the only 3.5 lakh rupees they will stop recognizing, the balance of 3.5 lakh rupees they will recognize it as interest income. Might be this 5 lakhs they have taken it from the previous figure, but total 7 lakh rupees, 3.5 not NPA, other 3.5 is NPA. Right. Next, coming to the next question. Last question is a straightforward question. Let us see what they try to say here. CA Rohit is conducting the audit of Taste Limited, a food production company, for the last 2 years. Hence, it is a recurring audit. Before commencing the audit for the year, he observed that the company has undergone a major shift in its product line by expanding into pharmaceuticals also. Besides this, the company is now subject to new regulatory requirements. So the company has entered into new business and change in the laws and regulations has also taken place. These developments were not present at the time of accepting the initial audit engagement. CA Rohit is of the view that there is no need to issue a new engagement letter. Examine whether the viewpoint of CA Rohit is appropriate. You tell me, in the given case, is it required for the auditor to issue the engagement letter? 100% yes. Why? Because there is a change in regulatory requirements, there is an expanding of the new business. So that from the chapter ethics and terms of engagement, we have a concept when in the case of recurring audit, engagement letter is required to be issued. So this is one such case. There are two cases here actually where you are required to issue the engagement letter even though it is a recurring audit engagement. So as you could see here, any indication that entity misunderstands the objectives and the scope of the audit, revised or special terms of the audit engagement, a recent change of the senior management, significant change in ownership, significant change in nature and size, legal or regulatory requirements, financial reporting framework. So all these are various examples where you are required to issue a new engagement letter even in the case of recurring audit engagements. Clear everybody? Right. So this is what regarding the MTP, short discussion, very short discussion. So not so complicated. That bank, whatever that bank audit related question is there, that is a bit interesting one. Apart from that, most of the things are grossly manageable. Right. Bye guys. Take care.